Hey everyone, welcome back to Reasonable Setups. So market finally having some upside momentum. On NQ, you can see that this is a daily chart. We are approaching to 50-day moving average. We basically closed on Friday around the 50 EMA level, and we are getting close to this buy side liquidity around 20,000. And I think this week or the next week, we are going to take this liquidity for sure. We already spoken about the 618 and zero point 0.5 levels um, being strong support as of now, and potentially we can have some some more upside momentum up to these uh, liquidity levels. And considering that this is the 200 EMA daily, we can have some strong resistance around this level. But on a daily chart, you can see market is trying to uh, break this compression, so it is more visible on a 4-hour chart. So we are basically squeezing right now on a 1 hour and 4 hour, 1 hour, and 15-minute charts as well. So yes, most probably will try to take this liquidity around 20,000 before the possible reversal, if it is going to happen. Of course, you can see that we hit this daily gap right here and continue the upside. So I don't see any reason why we are not going to take this 20,000 level before we find out where the real resistance is. So based on the charts, the next real resistance is from 20,600 to 21,000 area. So this is the previous resistance. You can see how many times it tapped these 20,980 80 levels right here. And yeah, possibly we can have some sellers there as well. But of course, the trend is right now to the upside. So anything above 0.5 FIB for me is pretty much of a bullish sentiment. And considering that we are having a 4 hour, 1 hour, and 15-minute squeeze to the upside, I will be very cautious to take anything short. So yeah, my main speculation, as I said, is to take this buy side liquidity. And on the other hand, if we lose this level right here from this push, which is 18,600, I will expect it to go and test this 0.5 FIB level around 17,600 as well. All right, so moving to the VIX chart right now. Yes, so we basically nailed the all the major three swing tops on the VIX chart. You can see that we closed this 10-minute volume imbalance and started the next leg down, as we already said. So this is basically a big bear flag. And yes, we are closing this daily volume imbalance from 23.6 to 25 basically. So yes, possibly we can go as low as 21.5. Yes, the downside momentum on VIX will continue, in my opinion, unless we get some kind of I don't know, another black swan news. So yeah, the market is pushing right now. There is no need to find the trend, and if you actually open the credit spreads, you can see that it is reversing as well, indicating a possible risk appetite to go back to the markets. So, but that of course, it can be pretty much a short-term bear market rally, as we have seen them a lot. But it remains to be seen. Right now we are squeezing, so there is no need to find a trend or trying to catch the top. So don't ever try to do that, and wait for the distribution anything like distribution right around this area at least. So if I see any reaction around 21,000 levels, I will consider adding two shorts. And moving to Bitcoin chart, Bitcoin is in a squeeze as well. But you can see that right now it is getting a bit faded. So we got overbought right here around this area. And my main speculation is and was, as I said, from 92 to 97, 98 area distribution. So we are currently at 94.4. Maybe I can expect some kind of distribution here and continue to downtrend, because I think Bitcoin and Ethereum still not down to the downside. They actually outperformed S&P and Nasdaq on this first leg down, but I think they will catch up on the next leg to the downside. So I will for the short side, I will wait to see another squeeze up right here, possibly making a higher high, and maybe start the distribution right here and to go lower. Shorts from 86 to 8, from 96 to 98 for me seems pretty reasonable. And of course, the stops above 100,000 level. So, but yeah, we will see. And it is still very strong. And I don't usually open any position in the weekends because it is pretty illiquid markets. Moving to Ethereum, Ethereum is sitting above this supply and demand level. I will expect Ethereum to go up to these 2000 levels as well, as we are seeing this overbought area again, and some kind of bearish divergence right here would indicate me to go short maybe around 2000, but not right now. So yeah, anything above 1700 is pretty much bullish. So the market structure is to the upside, but of course, I don't think we have seen the bottom as of today. But of course, everything can change in these markets. This is completely news driven markets. And on the other hand, if you see the chart based on the retail investors activity, so retail investors are buying like never before. So, but of course, it is never a good sign for the markets, and yeah, I will be very cautious in this environment right now. So coming week is pretty. Incoming week is pretty busy. You can see we are having Jolt on Tuesday. So GDP and payroll numbers on Wednesday. And of course, Bank of Japan is going to announce its rate decision in the press conference on Tuesday. I'm sorry, on Thursday. On Friday, we are having unemployment rate, a very important number. So the expectation is pretty much 44.2. Anything bad, bad number can really impact to our levels, as we already spoken about right here. So maybe we can have another squeeze up, but any bad number can indicate the potential bear market rally end, right? And don't forget that we are having earnings. The big tech is having the earnings this week. So the most important things, of course, on Wednesday, Microsoft, Meta, and on Thursday, Amazon and Apple. So these are the main things that can have an impact on the markets. So yeah, pretty optimistic right now, as I said, for the closing part. So there is no need to open anything short, to swing short positions right now. Yeah, we'll take this buy side liquidity and we will see what's going to happen. So please subscribe, and if you have any questions, I'm open to answer them. Thank you so much. Bye.